And we're off to a rocky start for 2025. It's not all bad news, but optically, things are not looking good right now. There's a bit of nuance here. We're going to get to that in a little bit, but active inventory currently in the GTA, over 17,000 active listings for sale. That includes all property types, condos, detached, townhomes, semis. Typically, for this time of year, we see just under 12,000 active listings. So that would mean currently active inventory is 44% higher than we typically see. For context, this is the highest year of active inventory for the month of January since the financial crisis. In 2009, active inventory in January was just over 20,000 active listings. If you like this type of content, like the video, subscribe to the channel. Once a month, I put out a video just like this where I cut through all the noise and I give you contextual stats based on seasonal norms. Now, let's take a look at some private stats. This is stuff that's not available to the public that we use on the back end to see what is happening on the field or on the ground floor. In January, towards the tail end of January, when people would ask how's the market, to me, it felt like the market was actually picking up. And that was because I was seeing a ton of offers being registered. And for context, let's say I show 100 properties over the span of 30 to 60 days. Every single property that I show, I then get notified as to whether or not offers are going in, if prices are getting reduced, things of that nature. Middle to late January, so right around here, I started getting a ton of notifications of offers going in. And to me, that felt like there was this massive uptick in volume, and I assumed maybe a lot of those deals were actually closing. Here's what happened. I'm thinking, hey, the market's picking up, but in reality, now that I'm seeing the stats, the market did not pick up. It's been flatlined. In fact, it's not doing that well as of right now. Now, typically, when you start seeing offers go up, that's kind of like your leading indicator that the next 60 days are likely going to have more sales, which is typical. We're likely going to have more sales in February and March. But they don't increase in the same relation as offers. So if offers are increasing, let's say by 50% week over week or month over month, sales may be increasing by 10 to 15% in relation to that. Now, here's a really interesting chart by my friend Dan Foch on Twitter, probably one of the best Twitter accounts you can follow for real estate in Canada. The purple line, it's active inventory of condos, and then this one right here is your detached homes. So typically they would be kind of in line, and as you can see, there's a massive spike or divergence of active inventory for condos being way higher than detached homes. So if you remember back in our first graph that I showed you, where we have over 17,000 active listings for sale, a lot of that is skewed because of how much condo inventory is up for sale right now. So in theory, this is why you're not seeing across your neighborhoods for sale signs on every single one, because this is mostly impacting condos, and condos obviously they don't have for sale signs on street corners. But that is not the point of this video. The point here is that it still skews the vibe of the real estate market. And we know the Toronto real estate market has not been operating on any sort of fundamental. It's mostly on vibe and sentiment. How do people feel about the market, what they're buying? Are they buying at the top? Are they buying at the bottom? What are they doing? However, just because detached or freehold inventory is not high like condos doesn't mean the detached is not impacted. The reason for that is something we've talked about in prior videos is these people trying to unload their condos are usually move-up buyers. So there will be the buyers that are going to buy your townhouse, your semi, or your small detached. So when they cannot sell, these people right here in the detached side, they're not going to be getting as many offers. Now, the detached space is moving if you're priced well. However, it's nowhere near as busy as it would be under normal circumstances when, for example, the condo and detached market inventory is kind of in line with itself. And if you're wondering how this is impacting prices on the ground floor, well, here is our first revelation. We're starting 2025 in a deficit in terms of pricing. Typically in the month of January, prices will go up by about 1.5% from December. In this case, they actually went down 2%. This is not normal, and it only happened recently in 2024. So we're seeing a lot of 2024 starting to play out in 2025, except we have even higher active inventory. And for context, here's 2024, where we started January of 2024 with a deficit, with a price decline of 2%, and then we shot up in February. We made up the price gains that we lost in January pretty much by doubling the price appreciation in February, where we ended February of 2024 with a 7% appreciation roughly. That is not to say that's going to happen in 2025, but typically, even in slow markets, seasonally prices do go up in the spring market. Now, what I suspect may happen again this year is we may just have a spring market, and I don't know if we're going to have a fall market simply because of active inventory and how many active listings we currently have. I've been on a lot of listing appointments in the last 2 to 3 weeks of people getting ready to list. And I pretty much tell everybody the exact same thing. You need to be ready by March at the latest. And at that point, it's basically wait for the call just to make sure once your area has a lot of traffic, offers are going in, and you don't have as much competition, that is probably the best time to list. If you're waiting for May, it may be too late. Obviously, this is just speculation on my end, but seasonally, your best time to kind of be ready is March, and then you have April and May to list to get ideally top dollar. Anecdotally, I already had one listing go live late January, and it worked out really well. We had about 48 showings, and this was a semi-detached in the West End. 48 showings, we had 10 offers on offer night, and we sold pretty much where we expected to sell. Firm offer, everything's great. Now, I don't expect this to be the case for every single listing that comes on. Obviously, it's very much pocket dependent, how much competition there is at the time of your listing, all that good normal stuff that you have to account for or the very much prepare for when you're listing. So as much as they say don't try to time the market, there's definitely things you can skew in your favor when you're bringing your listing on the market to make sure you are one of the more appealing listings at the time of list. And now for some good news. Coming off of the lows of 2024 sales absorption, where we sold, I believe, just under 65,000 homes, and we typically do between 80,000 to 100,000, we're starting January 2025 somewhat in line with seasonal norms, which is a good sign. That means that people are buying and there is liquidity in the market. On the bad news side, we have a lot more active listings coming on the market. This is going to be expected and this is going to continue. We'll have to remember that this is mostly impacting the condo sector. It's not like you're seeing a ton of active listings in desirable neighborhoods or suburbs. That is not the case. That is likely going to remain seasonal. But as we mentioned earlier, if the move-up buyers from condos are not able to sell, then they cannot transact and move up to these detached homes. This is why it's more important than ever to market your property correctly, price it in line with market, and you have to have a very thorough understanding of what market value is right now, as it's constantly in flux. If you want to learn more about how to sell properties in a slow market, look at the video in the description of this video and you can take a look at that. And I hope you enjoyed this video, and I'll see you in the next one.